Before we begin, I'll just request each panelist just to introduce themselves quickly, tell us what you do, and then we'll go into the panel. First,
Morning, everyone. My name is Hilda Njoroge from IHS Kenya. IHS Kenya is a private equity fund that we've been in the market for the last 20 years, focusing on affordable housing that is green. We are in 4 countries in Kenya, in Africa. So the biggest market is South Africa, and then we're in Namibia. We're also in Botswana, and Kenya as well. So Kenya, we are about maybe 5 years old now, and we have about 2 properties already operational. So one is in Garden City and one is in Tilisi. So I hope that you will grab a bag outside where we actually do have some goodie bag for you. We'll give you a bit more information about IHS, our projects, and what we're currently doing.
Good morning, everyone. My name is John Kabuye. I'm the project manager for the Green Finance Accelerator program, which is a program which is being run by the Global Buildings Partnership Network. So the Global Buildings Partnership Network is a global organization based in France, but it's globally organized but regionally operating. So in Africa, they operate through Kenya, where we develop decarbonization strategies for buildings. And one of the offshoot programs is the Green Finance Accelerator program, which is intended to come up with a pipeline and a funding strategy for green buildings so that we can be able to scale more buildings to become more greener. But by profession, I am a green building consultant, an IFC Edge expert, auditor, faculty trainer. I've been involved in certification of about 80 projects across 8 countries in Africa. So I'm happy to be here. Thank you so much.
All right, thank you very much. My name is Irongo Agema. I'd like to sincerely appreciate the REITs Association for this opportunity, and our moderator, Cynthia, even for having me. For us with the NSC, and maybe I like what Isaac, the last presenter, just said, it's always good to clarify facts. You know, the sun rises from the east. So Kenya is actually leading. So the west, by the time the sun is reaching west, we've already been there. So while they're competing who is first and second, us, we're already ahead. So anyway, so I'm from Nairobi Securities Exchange, and our role and purpose, why we have any engagement, why we participate, is to inspire Africa's transformation, because we feel there's so much potential within Africa, but we need also the key to unlock. He said that capital is king, so we want to see how can we unlock that potential. I'm in charge of business development for agriculture, and like our chairman fondly says, anything is REITable. So within our portfolio, we have a farmland REIT, so watch out for that. And the first we are really proud and always grateful to ALP. They were our first industrial REIT that 60% of that is agriculture. And also, I told Raghav yesterday, we are looking forward to a pack house for avocado. So I think you're on the right track, and a pleasure to be here. Over to you.
Good morning, everyone. It's a pleasure to be here with my co-panelists, led by Cynthia. My name is Ruth Okal, aka Mama REIT. I think if you've been attending these conferences, I don't need an introduction. I work for ICEA Lion, which is an investment and finance company. So we pride ourselves as architects of wealth. We grow and protect your wealth. We have insurance, asset management, and trusteeship business. So those are the companies we run across East Africa, in Kenya, Uganda, and Tanzania. I sit here as manager of REITs, the first listed real estate investment trust, Ilam Fahari REIT. I'm sure all of you have either learned from it or interacted with it or referenced it in your day-to-day undertakings. Happy to be here and looking forward to an engaging session. Thank you.
Great. Thank you very much to our panelists. And before we begin, as we mentioned, we're going to be launching the best practice guidelines today. These were formed by the Standards Committee within BRAC. And one of the reasons why we wanted to put together these guidelines was we felt that there was a gap in the market in terms of how investors analyze REITs and also how new issuers could come to market. So what we did was put together a brief guideline in terms of how investors can look at REITs, how you can analyze them, and also how you can compare them. So in terms of the guidelines, we have 4 sections. So we've got the valuation section. So that talks you through how to value the underlying property and then also how you would value the REIT itself. We've also got performance metrics. So we have actually outlined how you calculate certain performance metrics so that now as you look at a REIT, you can actually calculate those for yourselves and then you can now compare them across different REITs. We've also got an ESG section. You'll hear a lot of talk about what is a green REIT, green assets. So we've actually outlined that for you just to refer. And then we've also got a section on credit ratings as well, and that focuses on rating the REITs and bonds. So that's what will be launched after this, and that's what our panel will be discussing today. So in terms of our first question, and this will be to Hilda, as Kenya launches these new REIT best practice guidelines, what are the biggest opportunities to improve transparency, and which of these guidelines could have the fastest impact on investor confidence in the next 12 to 24 months? And we'll ask all panelists to take 2 minutes to answer. Thank you.
All right. Thank you, Cynthia. So ideally, a broad, I would say, overview of why we actually did this is because we actually wanted to solve the problem of trust, seeing that a lot of REIT information and underlying properties is very opaque. And majority of that information is not widely, I would say, received. While it's there, it's not necessarily put in a way that can be taken up in a way that actually allows capital to flow into the REITs. So for the second part of the question is what would be the fastest guidelines that could have the biggest impact on investor confidence in the next 12 to 24 months. I would say the first one would be obviously valuations, and I know Ruth will touch on this. And this is primarily, I would say, the property valuations, which create, they're quite vital and do create, intersect between market reality and what investment performance will really look like. And the second one, I believe in terms of data, we have provided, in the guidelines, as you will see later today, we have provided performance metrics that do actually help you analyze how a REIT is performing and what to actually look for in detail. And we have also put across a chat book. I'm sure that some of you who have been in the last REIT event, it was probably about maybe 2 months ago, we did launch a chat book that actually, we've done the analyst work for you, essentially. So we put the document together, put the information together for all the REITs and what's currently in the market, and made it in a way that now making REITs a comparable financial instrument with the rest of the financial instruments in the market. So that, I believe, is already in place and should actually have a good acceleration momentum for REIT valuations and analysis when it comes to our analysts, and also guiding decisions where capital managers choose to deploy capital into REITs.
Hilda, thank you very much for that. And the next question is to Ruth. Valuation remains one of the most important and sometimes most debated areas of REIT reporting. How can the market move towards greater consistency while ensuring that reporting is practical for issuers?
Thank you, Cynthia. Maybe for purpose of full disclosure, I was once a valuer before I became a REIT manager. So I wear many hats. So I'll speak from the heart. So, all right, thank you. So anyone who's dealt with property or REITs in general knows that valuation is the single most important aspect of the REIT, because most of our REITs are either 80%, 90% property, and the rest is cash or other instruments or other investments. But also valuation is the most debated, the most misunderstood. And so there's a lot of discussion around that. So how do I think that valuation can maybe be made to be easier on investors to understand. So I'll talk about three things. Number one is when we talk about valuation, we're not looking at having a single value or a predetermined value, but the biggest question is the comparability of those values. If I'm looking at REIT A or REIT B or REIT C, how do those values compare? And remember, valuation has an impact on your net asset value, your performance metrics, your assets under management, and so on. So I should be able to look at REIT A, B, C, and compare specific performance metrics out of valuation. So what the question then becomes, how do we determine the inputs that go into the valuation? For example, the discount rates, the yields, the exit yields, and so on, and the why. If you're using a discount rate of 14%, for example, why are you using it? And how did you come up with it? So the three questions that have to be answered for comparability is the why, the how, and the what. The second one is also standardization, so that it's understood across the market. If I'm talking about market value, then what is it? What does it mean? And how should an investor interpret that? If I'm talking about any other type of value, what does it mean? So you'll see, like in Africa, most of our REITs or most of our income producing assets are valued using the income approach, which you'll also see in our document that Hilda has alluded to. But the income approach has also sub-methods. For example, discounted cash flow, income capitalization, and so on. So how are you coming up with these aspects, and how and why for that specific real estate? And then how does it apply across? And then, of course, the last one I talk about is comparability and also proportionate application. For example, do we need to value annually, half-yearly, quarterly? And what about the costs associated with it? And can REITs, maybe small REITs, afford that? Or is it left for the bigger giants that are able to have the resources to afford that? So the conclusion is just to balance comparability, balance transparency, and also balance the cost components, because that then has an impact on your return. Okay.
Ruth, thank you so much. Next, we'll go to John. So ESG reporting is becoming increasingly important to capital allocation decisions, yet local regulation is still evolving. In practice, what level of ESG disclosure is realistic for Kenyan REITs today, and how can tools like EDGE and GRESB improve credibility without turning reporting into a box-ticking exercise?
Thank you, Cynthia. They always say that the devil is in the detail. And right now, as we speak, there's a lot of information or a lot of insight within ESG or sustainability data. So what has happened in the market is that as much as regulation is moving a bit slower compared to the market is moving ahead because investors want transparency, investors want reliability, and investors want assurance. And a lot of that can be found within ESG data, because through ESG data, you are able to get an extra lens into the risks your business faces, and also opportunities which you can take advantage of or which can quietly move away from you. And that's how ESG becomes very important. Now, we've referenced two standards, the IFC EDGE standard and the GRESB standard. GRESB standing for Global Real Estate Sustainability Benchmark. Now, one of these standards applies to an asset. For example, you can get your asset, a building, which you have in your REIT, green certified, so you can be able to use the IFC EDGE standard. And then you have GRESB. Now, GRESB is not for the asset, it's for the entity. In this particular case, which is this backbone organization holding these assets. Now, in this particular case, we're talking about REITs. So REITs will be your backbone organization holding these assets. So how do you make sure that your REIT is actually meeting global best practices as far as ESG is concerned? And that's very important because, yes, we will build assets, get them green certified, but then standards keep on increasing, standards keep on going high, and also, of course, assets which we have in our REITs also keep on failing because these are buildings, they may have a level of performance, but then over time, that level of performance starts to fade away. So how do you track and make sure that that performance is still being maintained? So these standards like GRESB come in and they are able to help you to understand the level of performance, how your asset is performing, does it need to be retrofitted, do you need to increase the standard and all that. Because the information that comes from that helps you to also analyze an asset better, because we now have new terminologies which are coming up which help us to understand assets much more efficiently. For example, right now, most investors in sophisticated markets are looking at the capital efficiency of assets. They're looking at the carbon efficiency of assets. They're looking at the return on capital based on ESG data. And most of this information is where you take some of the traditional information, of course, which you find in financial assets, and then you juxtapose that information against ESG data, and that way you are able to get how that asset is performing. So basically that's what we also tried to capture in the toolkit, so that it's dynamic, forward-looking, to be able to help assets, as much as maybe your REIT assets may not be green certified, or they may not be looking into ESG, but you can seamlessly and easily reference that toolkit and can be able to know where to start from, how do you start at the asset level, and then you slowly see how you start to benchmark yourself against a global benchmark like GRESB, because at the moment, that's the benchmark which all the biggest fund managers are looking at, to be able to understand how a fund or a REIT is actually performing. Thank you.
John, thank you very much. So the next question is for Wagema. Credit ratings are highlighted in the guidelines as a way to improve transparency, comparability, and access to capital. Do you see ratings becoming a standard feature of the Kenyan REIT market, and what would need to happen for issuers and investors to fully embrace them?
All right. Okay, thank you. Thank you very much. And I like the question. And really, if you look at the underlying challenge we are looking at, is really trust. The transparency, the data, and everything, and comparability. Can I really trust this investment? And for me, it's a firm yes. This is going to be a standard in Kenya, because when you do credit rating, and if you get a chance to look at now the documentation, the standard guidelines, you'll be able to see that there are three things that credit rating does. One is provide clarity. When we all came here, I remember the hostess telling us, don't take a selfie with the hippos. One of the choices why RK chose to come to Enashipai is because it's a 5-star hotel. You know, imagine you are trying to explain all that. Oh, it has a pool, it has a sauna, it has all those things. It becomes too complex. And when you look at the REIT asset class, there are so many moving parts. You have a property here, you have a property there. So how do we simplify that? How do we bring clarity? So that clarity comes when you know that this is a grade A. It's a grade A, this is a grade B, this is a triple B, and all that. So that brings clarity. The second thing that it brings about is comparability. When you're able to compare, you have maybe a board of trustees and also fund managers. You want to look at different opportunities. As we see, the market has evolved. REITs are going to become more, many of them. We are looking at now institutionalizing REITs in the market. So one of the key things that will become increasingly important is comparability. How do I compare this REIT to this other one? How do they maybe compare on different fronts? We've talked about different types of REITs. We have industrial, brother from Ghana has talked about hospital REITs, and someone else is talking maybe about the affordable housing. So how do you cut across all that? How do you compare them? But if you have a rating, that becomes easy. More recently, of course, you have the dollar denominated. I had the privilege last week of attending maybe one of the trustee meetings, their board. And one of the things they're asking, how is this one better than the other one? But if it has a credit rating, it becomes much easier for that. And then the third one is really credibility. And the whole panel has been still talking about the same. So having global benchmarks, one of the things that it does is that it makes that this is actually the standard. Whether you go to the US, whether you're in South Africa, whether you're in Zambia, wherever you are, these are common standards. So we are able to look at global standards, but at the same time, we're also not averse to now the local realities. So I feel like even the third thing, for us to have credibility, we have to benchmark globally, but also be sensitive to the local realities, which also makes it also practical and also will lead to greater uptake. So mine is a firm yes. From an investor point of view, it becomes easy because you can be able to compare. From an issuer point of view, then also you can also bargain. because you can tell someone, I'm offering you a grade A. More recently within the market, we had Safaricom. They borrowed at a low rate when they had their green bond. We also had EABL. Some of these, of course, some people argue it was not rated and all that, but we know them, and that's the trust that we are looking for. Maybe you're a new entity, you're coming to market. How do you compare against these people who've already been known? So when you get a credit rating, it also puts you on that market. It becomes easy. And even for the pension funds, it also becomes easy to allocate capital because you're able to price the risk. So you're investing in this risk REIT compared to this other one. Can we price that risk? And that's what credit rating does. Maybe briefly, I could give an example. Last night, I think the last call I had was from someone who's being credit rated, and I'm speaking now to also the issuers. It's painful. Sometimes it's also uncertain because I could see the emotion even with the guy who's being rated, because it is someone else, what you've worked for all your life to bring to market, someone else independent is actually now assessing you and giving you a grade. So I could sense all that, and even tension from the credit rating agency again. So just to strike the balance between the two, but the end result, and that's why even if you get, say, a low credit rating, don't fear. We have the Garantco, we have the Mana Guarantee, and these people can also do credit enhancement. So it also becomes very good because for you it gives you it's a mirror. You're able to see, oh, this is where I need to strengthen, this is where I'm strong at, and also there are other people to help and strengthen. Thank you.
Thanks, Wagema. So I've received instructions, so maybe we'll just skip to the last question. And this will be for Ruth, which is, what should success look like 12 to 24 months after these guidelines and the performance matrix has been introduced?
Thank you, Cynthia. So for me, success is when we are moving together and you're on the same page. Matters valuation, matters transparency, matters trust. I would like to see a day when we go to meet with investors and we are not acting as defense attorneys, in the sense that you're being asked questions about, oh, why is it 2 billion? And why is it this? And why is it that? I would love a situation where we go to talk to investors and we're talking about strategic engagements. So, Mr. REIT Manager, how is your portfolio doing? Where are you going next? What should we look out for? We're looking forward, we're looking strategy. We're not looking backwards and wondering, how did you come up with this number? Why did you pay, for example, 30 cents last year? Why are you paying 60 cents? So with clarity and transparency, we're able to now have predictability, and we're able to have that commonality of thought, and we're able to move together and look forward. The second one is when I will see 2 analysts or 3 analysts looking at the same REIT or the same entity, and coming up with more or less, not very varied conclusions. Or even to see analysts taking up REITs and researching on REITs and producing research, because without that, then the investors have no way of engaging. Our governance structures are when you go to the board of trustees, for example, if it's a pension scheme, you're asking them for money. The board of trustees don't have the capacity or maybe the time to analyze every single REIT. So if we see analysts taking up and researching on more REITs and bringing this information to the fore, and it's a comparable information that can be used to compare investment across the REIT spectrum, that for me would be success. So it's not about looking for a specific number or uniformity of outputs, but really just to know if this REIT is valued at this price. What does that mean, and why is it valued at that price and not the other one? So I think that for me is going to be success in the next 2 years.
Thank you, Ruth. And with that, we conclude the panel today. I just want to thank our panelists for taking the time and to let you know that the best practice guidelines have been launched and are available on the website, RAC website. Thank you very much, everyone.